Hey there, welcome back. My name's Matt, that's Matilda. This is the Bald Prairie Real Estate Canadian Monthly Housing Market Update, and I think this one's gonna be a lot of fun. We've got rising interest rates, absolutely skyrocketing rates, slumping sales, higher levels of inventory. Of course, you know what that's gonna do to prices, but if you watch through the entire video, you might catch a pattern that's starting to emerge in the Canadian real estate market. Now, if you wanna just skip ahead to your favorite city, that's okay. I'll put in the description and the timestamps. You can jump directly to it, or the playboard. It's all broken out into chapters. But at the end of the video, I'm gonna explain that pattern I'm seeing and why I think it's happening. But even with house prices dropping, those higher interest rates mean houses are less affordable and actually more expensive to buy today than they were even a couple of months ago. If you want me to do an explainer on that, how that could be possible, let me know in the comments below and I'll put that video out. But let's start this off, as we always do, with another terrible joke. And this one comes directly from the comments section. What do you call a fancy fish? Sophisticated. If you have a terrible joke that I can use in a future episode of Bald Prairie Real Estate, put it in the comments below. If you love learning about real estate and keep an update with the market, make sure you hit the like button and subscribe if you haven't already. Starting off in Victoria, they had 612 homes sold in the month. That's down 27% from the 5-year average of 841 homes sold. And they had just shy of 1,400 homes put up for sale in the month. That is up 7% from the 5-year average of around 1,300. That brings active listings up to 2,059. Again, we see more than 2,000 homes for sale in Victoria. This is good. It is still down 21% from the 5-year average, where normally this time of year, they've got about 2,300 homes up for sale. And for the first time in a long time, months of inventory just edges into that balanced market territory at 3.4. Even with those fewer sales and high levels of inventory, benchmark price creeped up just slightly, $1.01 million. That is up 22% from last year. No doubt things are slowing down in Victoria, much like what you're going to see across the country. We are still just barely in a balanced market territory, at least numerically, but of course, buyer sentiment and seller sentiment, buyers are thinking it's a full-blown buyer's market, and sellers are feeling like they should be still getting February prices, but we're kind of stuck in this limbo stage right now. We'll see which direction things go in Victoria. The 2,400 homes sold in Vancouver last month, that's down about 17% from the 5-year average of just around 2,900 homes sold in a month. And the number of new listings put up for sale is about 5,200. That is down 4% from the 5-year average of about 5,400 homes put up for sale. So that brings active inventory to 10,400. Again, down 11% from the 5-year average. Normally there's about 11,700 homes up for sale this time of year in Vancouver. So numerically, months of inventory still is a seller's market at 2.0. And the benchmark price is about $1.235 million. It is up 12% from last year, but down about 2.5% from the peak we saw a couple of months ago. Remember, across Vancouver, prices and market activity is varying wildly. The core of Vancouver is doing significantly better, whereas the suburbs and the Fraser Valley are seeing a much more significant downturn in both sales and prices. Talking with real estate agents in Vancouver, they're saying how the headlines and the reality are two very different things right now. The headlines are telling you that the market's in a full-blown free fall and it's going to collapse or already is collapsing, and yet the data shows that, well, we're basically back to 5-year averages. Buyers are definitely not very motivated right now. They're basically sitting on the sidelines to see what happens unless they're finding a steal of a deal. Sellers are holding out for prices that they would have got a few months ago, hoping that they get it today. Looking at the numbers, Calgary is still one of the hottest, if not the hottest real estate market in Canada. 2,800 homes were sold. That's up 36% from the 5-year average of just under 2,100 homes sold in a month. And there were just over 4,000 homes put up for sale, which is down about 12% from the 5-year average, around 3,600 homes put up for sale in the month. And that brings active inventory to about 5,400, but that is down 27% from the 5-year average. Normally there's going to be about 7,300 homes for sale at this time of year in Calgary. Months of inventory, 1.3. That is the lowest in Canada right now. And the benchmark price, $543,000. That's up 17% from last year. Even though Calgary is probably still the hottest real estate market in Canada, it's not immune to higher interest rates and overall market sentiment. We're seeing a slowdown across the board, and specifically in the single family home segment there. But we have strong interprovincial migration into Calgary and Alberta in general, as well as a very strong economic situation there that is keeping elevated levels of activity and prices, keeping that real estate market quite strong compared to other markets in Canada. In Edmonton, there were a little under 2,600 homes sold in a month. That is up 25% over the 5-year average. Normally about 2,000 homes are sold in the month. And then there were 4,300 homes put up for sale. That's up 18% over the 5-year average of around 3,600 homes listed for sale in the month. And the number of homes currently for sale in Edmonton, a little over 8,000. That is down 8% from the 5-year average, around 8,800 homes for sale in the month. It means months of inventory though is at 3.1, just on that edge between sellers and a balanced market in Edmonton. The composite benchmark price is up about 8% from last year at around $400,000. Now, I know that is higher than the $370,000 I mentioned last month. Again, CREA, the Canadian Real Estate Association, changed the formula as to how benchmark price is calculated. So the number went from 370 to 400. The percent change didn't change at all because I went back and rejigged all of my old data so that those numbers are reflected accurately. In Regina, there were 408 homes sold in a month. That's up 27% from the 5-year average, is about 320 homes sold in a month. And it marks only the 3rd time in history that more than 400 homes have been sold in Regina in a month. The other two being last month and June of 2021. There's also a big jump in the number of homes listed for sale at 648. That is up 13% over the 5-year average of 530. The number of homes currently for sale in Regina sits at 11,045. That is still down 23% from the 5-year average. Normally there's about 1,500 homes for sale at this time of year in Regina. And that leaves the overall citywide months of inventory at 2.8, meaning that is still a seller's market. But again, like I've said for many months now, it's very segmented. Some market segments are very hot, while others, we've got an excess of inventory and it's a buyer's market. The composite benchmark price is about $330,000, is up 4% for last year, and it's continued to rise every single month this year. When you're reading the news, you're probably hearing how bad the Regina real estate market is. Except when they're talking about the real estate market, they're really talking about Toronto and Vancouver, because those markets are completely different than ours here in Regina. We're having a much stronger year than what they are, and while Vancouver and Toronto prices are declining, Regina prices are increasing. But we are into the summer months now, and we are seeing a change in the market. No doubt, I'm seeing my phone ring less. We've got less activity. Houses that I would have expected to sell first weekend of the market are sitting in the market a little longer. So we are seeing a shift overall in the Regina real estate market right now. The 534 homes sold in Saskatoon last month, that's up 19% over the 5-year average of about 450 homes sold in the month. And there were 940 homes put up for sale in Saskatoon. That is up 14% from the 5-year average of about 830 homes that are typically listed for sale. It's also a big jump from what we saw the previous month. I'm curious if it's just a blip on the radar or the start of a larger trend. And that bump in homes that were just listed for sale means active inventory in Saskatoon, 1,269, down 31% from the 5-year average of about 1,850 homes that would typically be for sale this time of year in Saskatoon. So that brings the months of inventory to 2.4, which means it's still a seller's market citywide in Saskatoon, but like Regina, it's very segmented. Some areas are very much more active, while others are more of a buyer's market. The benchmark price in Saskatoon is at $380,000. It's about 6% higher than last year. And just like Regina, we've seen prices increase every single month in Saskatoon. And much like Regina, we're seeing your typical summer slowdown and what I believe is an overall shift in the market back to more normal levels of activity, although it's still really busy in Saskatoon, just not as crazy busy as it was a couple of months ago. Out in Winnipeg, the Blue Bombers still haven't lost a game, and that is frustrating the heck out of me as a Rough Rider fan. But let's talk about real estate, where they had just about 1,800 homes sold last month. That's down 8% from the year before. There's just shy of 2,900 homes that were newly listed for sale in the month. That's a big jump from the previous months, and something was badly needed in Winnipeg. They're up 21% from the previous year. A number of homes that are currently for sale, just shy of 3,500. That is up 25% from the year before. And it means months of inventory is at 1.9. They're finally starting to get more inventory putting less upward pressure on prices in Winnipeg. And speaking of prices, the benchmark price is $355,000 in Winnipeg. That's up 7% from last year. When I was talking with real estate agents from Winnipeg, they said, although we're still very active, it's definitely shifting back to more normal levels of activity. There's a definite slowdown going on in the market, less upward pressure on prices, less bidding wars, but it's still really busy. The bad news just keeps coming for the Toronto real estate market.
So, Professor, would you say it's time for everyone to panic? Yes, I would, Ken.
The almost 6,500 homes that were sold last month in Toronto, well, that is down 28% from the 5-year average, where normally there's nearly 9,000 homes sold in a month. And this is now 2 months in a row that we've seen the fewest number of sales in Toronto in the last 20 years. Now, the numbers showed there were 16,300 homes put up for sale in Toronto last month. That would be down 2% from the 5-year average, about 16,700. But I actually think there were fewer homes listed than that, because there has been a number of homes that have been listed multiple times with different prices in order to trigger activity. So I actually think the number of homes listed for sale is quite a bit lower than that. And with just over 16,000 homes currently for sale in Toronto, that kind of proves that true, because that is still down 6% from the 5-year average of about 17,000 homes for sale. And it's basically unchanged from the month before. But months of inventory is at 2.5, so we're trending closer and closer numerically to a balanced market. Of course, the headlines and market sentiment is very different than that. We'll talk about that in a second. The composite benchmark price in the Greater Toronto area is up about 18% from last year at $1.2 million, but it's also down about 13% from where we were just a couple of months ago, bringing us back to basically December 2021 prices. It was only a few months ago that we were talking about bidding wars between buyers in Toronto, and now we're talking about bidding wars between renters in Toronto. There's been an increase of nearly 20% on the average monthly rent in Toronto, and that doesn't surprise me at all, with the number of qualified buyers that are saying, I'm gonna sit this market out for a couple of months, rent something and see what happens. And when I'm talking with agents in Toronto, there is no doubt that the market sentiment is far more of an impact than what's actually going on in the market. A lot of buyers are just, again, sitting on the sidelines, and a lot of sellers are seeing properties that would have sold first week or so on the market now sitting and even having to do price reductions to get them sold. Sellers have to realize we're in a different market than we were a few months ago. You're not going to get the prices that you did even just 60 or 90 days ago. And yes, while prices across Toronto are declining, it's not happening evenly. I'm going to put a link in the description of this video to an article that has a map showing how much prices have dropped in different neighborhoods in Toronto. And there's a neighborhood that has increased 23% month over month. Yes, increased 23% from one month to the next. Put in the comments below if you found it. In Ottawa, they had about 15,000 homes sold in a month. That's down 28% from the 5-year average. Normally there's just over 2,000 homes sold this time of year in Ottawa. There were also 3,200 homes listed for sale. That's up 35% from the 5-year average of about 2,300 homes that would be listed for sale this time of year. That leaves the number of homes currently for sale in Ottawa at about 2,800, and that is down 13% from the 5-year average, which normally there's about 3,200 homes for sale at this time of year. Meaning numerically, we're still in a seller's market in Ottawa. And that composite benchmark price did start to drop. It's $730,000 right now, which is up 9% from last year, but it is a drop of about 3.5% from a few months ago. And this will sound like a broken record, but sellers are expecting February prices and buyers are expecting massive deals. Now, we also did see a drop in prices last year at this time, and then a massive rebound in the back half of the year and into the start of this year. I'm not sure if we're going to see that repeat again this year. And the other interesting thing that I'm seeing in Ottawa is that even with inventory levels triple what they were to start the year, they're still well below the 5-year average. That's how low inventory was in Ottawa at the beginning of the year. In Montreal, they had about 4,100 homes sold in the month. That's down 7% from the 5-year average of about 4,400 homes sold. And there were 6,500 homes put up for sale. That is up 26% from the 5-year average of about 5,200 homes that would normally be put up for sale in the month. So that means that the number of homes for sale is about 12,300, and it is still down 42% from their 5-year average, which is 18,000. But that brings months of inventory to 3, so right on that edge between a seller's market and a balanced market numerically. And for the first time in a long time, the composite benchmark price in Montreal has slipped a little bit. It's about $546,000 right now. That's still up 13% from last year, but down about 1.5% from the month before. And when I'm talking with local real estate agents in Montreal, two things came up that were really interesting. The first one and the most obvious is that higher interest rates are having a significant impact on the market. But also, Bill 96 is causing a lot of fear in the market and forcing some people to decide to leave the province of Quebec. I know a lot of agents are saying good long-term clients of theirs are picking up and leaving to another province specifically because of that new legislation. And finishing things off in Halifax, there were 644 homes sold. That is down 24% from last year. They had 860 homes put up for sale in the month. That is up 27% from last year. There's just shy of 700 homes for sale right now. That is up 42% from last year, but months of inventory is still 1.4. Very low, very strong sellers market still in Halifax, numerically at least. But average price dropped. It's $560,000. That is up 29% from last year, but a little bit down from the month before. It's the first time I've seen prices drop in Halifax in a really long. And when I'm talking with agents in Halifax, they are seeing that the number of sales happening is slowing down, inventory is increasing, which of course is reducing upward pressure on prices. In some areas, we're seeing prices decline. This is good news for buyers. We're seeing a more leveling off and a slowdown in the market as a whole in Halifax. I said at the beginning of the video that there was a trend emerging in the Canadian housing market. Now, if you watch the whole video, you might have caught on to it. And that is cities with really high house prices are seeing a very big difference in what's going on in their housing market compared to the cities with much more affordable prices. In the more affordable cities, higher rates might cost you $100 or $200 a month. In Toronto or Vancouver, that might cost you $900 a month. And when your payment goes up $900 a month, that is going to have a significant impact on your decision to buy and how much you spend. Whereas $100 or $200 probably doesn't make much of a difference. You're gonna buy the house that you wanna buy, and if it's a little more expensive, so be it. While the market might crash, this, my first time homebuyer guide, brand new and updated, definitely won't. And this video right here is what the YouTube algorithm says you need to learn about next on Bald Prairie Real Estate. As always, guys, thanks very much for watching.